let's talk about something that confuses almost every beginner investor. Have you ever noticed this strange situation? A major global event happens, a geopolitical conflict, a central bank decision, or an economic shock. The news sounds extremely negative, but instead of falling, the market sometimes goes up. Or even more confusing, the market starts falling before the bad news is even announced. So what is happening? Is the market irrational? Is everyone just guessing? Not really. In reality, the market often moves before most people understand why. And there are three key forces behind this: institutional positioning, information lack, and narrative creation. Once you understand these three things, the market will start to make much more sense. The first reason is institutional positioning. Most beginners imagine the market like a crowd reacting to news headlines. But in reality, a huge portion of market movement comes from large institutions. Hedge funds, asset managers, pension funds, investment banks. These institutions manage billions, sometimes trillions of dollars. And because their positions are so large, they cannot simply click, buy, or sell instantly. They must prepare in advance. Think of it like a chess game. A beginner chess player reacts to the opponent's move. But a professional player is thinking 5 moves ahead. They position their pieces long before the attack actually happens. The market works in a similar way. If institutions believe global risk might increase, for example, because of geopolitical tension, they may begin adjusting their portfolios days or even weeks earlier. Reducing risk, adding hedges, moving capital between sectors. So when the headline finally appears on the news, the market may have already reacted, which is why sometimes the market seems to move before the news even arrives. The second reason is information lag. Information does not reach everyone at the same time. Large institutions often have access to research teams, economic models, industry data, and faster information systems. This doesn't necessarily mean they know secret information, but they can often detect signals earlier. Think of it like an airport radar system. Air traffic controllers can see an airplane approaching from hundreds of kilometers away. But passengers inside the airport terminal only see the plane when it's already close to landing. In the market, institutions are like the radar. They analyze signals such as bond yields, currency movements, commodity prices, shipping data, capital flows. These signals can hint that something is changing in the global environment. So institutions may start adjusting their positions before the general public even notices anything unusual. By the time the news reaches social media or television, the market may have already moved. The third force is narrative creation. After the market moves, the media tries to explain why it happened. You often see headlines like, "Stocks fall because of geopolitical tensions," or "Markets rise because investors are optimistic." But here's the interesting part. Many times the explanation comes after the price movement. Think of it like a detective investigating a crime scene. The crime already happened. Then the detective looks at the evidence and builds a story to explain it. Financial media works in a similar way. The price moves first. Then analysts and journalists look at the situation and construct a narrative to explain what happened. The story helps people understand the market, but sometimes it also creates the illusion that news caused the move, when in reality, the move may have already been driven by positioning and expectations. Final takeaway: so the next time the market moves in a way that seems confusing, remember these 3 forces: institutional positioning, information lag, narrative creation. The market is not simply reacting to headlines. It is constantly adjusting to expectations, probabilities, and risk. And this is why experienced investors focus less on predicting the next headline and more on understanding how the market structure actually works. Because when you understand the structure, price movements start to make much more sense. In the next episode, we will tell you why most breakouts fail, resulting in so many beginners trapped at the top. If this helped you, remember to like and subscribe. Thanks for watching Profit Path, where you invest with clarity, confidence, and consistency.